What's up, guys? Back with another video. Today we're going to get into the Consumer Price Index, also known as CPI. So going forward for all these videos, I'm just going to have three questions to answer for you guys. It's going to be, what is this? Is it an investment? And how does it matter? So number one, the CPI, Consumer Price Index. So what is it? So it's the measure, and it's always reported monthly. It's the measure of the average change over time in prices paid by urban consumers for a market basket of consumer goods and services. Now you may be saying, okay, what does that mean in simple terms? So let's say you have a chart or a pie chart, for example, and it has things such as foods, housing, apparel, transportation, medical care, okay? And we pay for it. Usually you could get a better average on the year, but if you want to be a little bit more accurate, you can do it month by month. So it's showing the average change in the prices that we consumers pay for those market basket of goods or services. And in simple terms, also, it measures it's an estimation, excuse me. We don't want to get it mixed up and say it's a precise or accurate measurement, but it's an estimation of inflation. Because, for example, let's talk about when gas prices went down during COVID. They went down, but then as things started to slowly open back up, they went back up. Therefore, prices rose again. So I have my notes here. So in a way, it shows what you feel the most from inflation. Let's use the consumer price index as that for an example. So it shows what you feel from inflation. So you could have, let's say gas is a very minuscule percent of the consumer price index because it's incorporating the consumer goods, the apparel, transportation, food, housing, etc., just to name a few, medical care. And let's just say oil or gas is a small piece of that. But however, because it has a high change over time where prices could have spiked maybe 25%, 30% in some areas, that shows that, hey, we consumers have paid a lot more for gas within a year or two. Let's just do 2020, 2021. Saw gas prices go up right after things started opening back up. And that shows that, hey, what we need is basic necessities to get around in a way. It may or may not be a basic necessity depending on which uses transportation, but regardless of the fact, because we have to pay a certain amount for that market basket of goods, which is gas, then it will show the change of time how inflation is going to tack on because we printed more money, and there's been a lot of foreign exchange and dollars going down, and a lot of times the economy is not as good as we think it is because people say, well, we bounced back, yes, but we still have certain situations that we're going through. For example, the housing market's not that good. People can't afford to rent, let alone be approved for a mortgage. And foods went up, things are becoming more expensive. So as all the things that have happened during COVID have happened, it shows the ripple effects onto now. So let's just say that the highest price increase came from gas. So you're wondering, well, what would the CPI be beneficial for me to know about it if you're talking about this? So it really helps you understand what inflation is doing to you because you may think, well, this was, let's just say a loaf of bread right now is about $4 here in Florida. Let's just say that. And you're like, well, bread was like about 250 a couple years ago. Well, because of all the things that transpired, how we printed more money, how we obviously I felt the ripple effects of the economy not being as strong as we think it is, or the economy, even though it could rebound, it's still somewhat at a point where we're not fantastic, but we're trying to get there. So because a lot of things are slowing the economy down, obviously, the interest rates have been going up or either staying the same, but regardless, they have been going up over the past year. And inflation has been being tacked upon us. Therefore, you're going to see all these changes in prices go up because the cost of living, the standard of living now has went up probably drastically if you want to use that word. Now it's a point to where we have to understand what items are we buying, how are they being affected by inflation, how much are they being affected by inflation, because you can see everything around here is being affected by inflation. It was about how much. So if gas can be a small part of the CPI but have the highest increase, then we have to take a step back and understand what is going on with that type of market for the oil industry. So it's products at a constant quality, and it's used to adjust other government economic indicators such as GDP. So the CPI is very helpful for you to understand your basket of goods, how much you're paying for them, and the change in them, which is reported monthly. And you can see, well, how does inflation really kick our butts? So is it an investment? No, but I just explained how it mattered to us because we're trying to track the average change in prices that we're paying for a market basket of goods and services. Now, prices are calculated and they are weighed based on the average proportion of consumer spending that is thought to represent. So that means that when the consumer price index or CPI is being tracked, it's calculated because it's showing how much we put forth towards a specific industry or a specific proportion of goods. So let's just say that when they're calculating it for food and housing, they're saying, well, more people are obviously going to spend money on food because, yeah, you pay rent, you may pay mortgage, but not everybody's going to move into different places. So they're saying, okay, we have to pay a lot of money for food. So it looks at supermarkets and it weighs that heavily against housing, or it may weigh that against apparel and say, well, people aren't really necessarily buying clothes that much, but they're buying a lot of food. So when you have that weight of that item in the CPI, it's going to say, well, what on average do consumers spend? So let's just say consumers spend on food. If they take one trip to the grocery store, let's say right now you spend about $250 on a trip to a grocery store, maybe every other week or every week, maybe. And they take that proportion and calculate it from the CPI and they say, well, how much would they spend on average for, a thing of bread? And let's just say people always spend $4 on a thing of bread. So now they're going to look at that and say, well, within food you have bread, and the average cost of bread last year could have been like 320, and now I would say it's about $4. So like, okay, it went up 80 cents. So now they're tracking that with the CPI to show you that, hey, inflation has caused us to experience, growth, and not really a good growth in terms of an increase in price of things. But that also means that eventually wages will have to catch up, hopefully when people vote for things in their elections. But to subside all that and just go to the basic point of the CPI, it's going to measure the average change in price over time of what we pay for goods and services. So you can use that to track and say, well, gas went up, housing went up, food went up, apparel went up. You can track that via the CPI and see where everybody's spending things and what's being tracked the most to where it's actually affecting us in, I guess, a big way. And well, I guess we can mostly complain about or tell our politicians, tell our senators, etc. Because, for example, gas, you can say, well, can we release some reserves? Maybe we can. Can you say, can we have access to other oil? Well, obviously, there's a lot of things going on in the world. So, long story short, you can use the CPI to be influential whenever you're creating analysis, or even if you just want to track items and say, well, maybe I could bring this up to my representative and see what they can do about it. So that's it, guys. I hope it wasn't too much or too difficult to understand, but the CPI is pretty key. It's reported monthly and it helps us with inflation to understand how it feels on us. Thanks, guys, for watching. Tune in next video. Appreciate you guys.